All right. So, should you guys launch a token? When to launch a token? When is too early? When is too late? Lots of questions that we'll try to answer in this panel. Before we get started, let's do a quick round of intros, starting to my right.
Hi, my name is Chris. I'm a partner at TenSquared Capital. We're a VC fund that invests in the attention economy, media entertainment, sports, the creator economy.
Hi, Thomas, founder of a firm called Strobe. We are what used to be Block Tower's VC arm, early stage VC focusing in investments like Ethena, Sky, Morpho, Maple, and others. So a lot of stables, RWAs, and the likes.
Hi, I'm Matt Szenics, director of the Magic Eden Foundation, supporting the Magic Eden ecosystem and all the apps that they build.
And my name's Hassan, and I'm head of trading strategy at FalconX. So everything from like derivatives to spot trading to TVL and market making. Thanks.
So we got everything. We got the investor side, we got the more equity investor, the operator, token launcher, and the trader. So very excited to get into the discussion. First question I have for you guys is, where are we in the market cycle, and how does that affect thinking about token generation events?
Yeah, I mean, happy to jump in. I think we probably all share this view that the market has reversed pretty quickly and there's no bid for most tokens and equity seems to be in favor. Venture volumes are down. Volumes on the trading side, I'm sure Hassan will comment, are healthy-ish on some of the majors, but inexistent on the long tail of coins. So it's a bit of market fatigue. Perhaps that's because the issuance hose for tokens has been on for a decade at an accelerating rate. But yeah, curious if you guys share that view or not.
Yeah, I definitely share that view from like a token issuer perspective. We thought about when's the right time to launch a token 2 years ago. Now in hindsight, I actually think that's not the right thing to focus on, but generally what we've observed is people do have a lot of fatigue. The bid is not there for alts like it used to be. I think we're all pretty aware of that. On the day-to-day though, I'm not like too stressed out about like the market movements, but I have noticed there's definitely just like less demand for new issues.
Yeah, I agree. Both companies in portfolio and founders we talk to are pushing off any TGE or fundraising around those events.
So Hassan, what's the trade?
I think alts bottomed, to be honest, but I still wouldn't bid them because of everything what people said here. I think there's a dearth of coins and a lack of capital, and it's really like musical chairs because there's only enough money to bid 2 or 3 of these things at a time if it's not a major, and it's very difficult to trade. And in general, what we've seen is there's way more marginal sellers than buyers of these tokens, which really puts a cap on how high this thing can go, and it hurts the community.
Maybe one thing that's worth noting is like for the first time ever, we have some dispersion in the sector. Certainly tokens with clearer value accrual models like a Morpho or tokens with buyback like a Sky, a Maple have outperformed a little bit, but there's general market fatigue even around those names, I think.
Yeah.
And so let's start from the VC perspective, right? Like, I have 2 sides of it. Is one, like, how do you see alignments of interest between the VC investors and the token holders? And the second part is, what do you look for in a token in terms of TGE strategy?
I think in terms of alignment, a key thing we look for is us as a fund, but also the founder and management. We want to make sure whatever instrument, whether it be equity or token we're invested in, the founder has sort of a rough lead the same incentives as that we do. I think in terms of TGE, the thing we really want to solve for is product market fit. I think having a token is good for customer acquisition, but it can also create false product market fit if a lot of people are there to farm the token. It works for a while, but it might give you a false sense of confidence in how strong the product is, and if you really use up a lot of your funds in that period of time, things sort of go the wrong way very quickly.
I like the question because VCs get a bad rep as like the serial dumpers on the charts and the least aligned with the founding team. But in reality, VCs are often the longest lockups on all these cap tables. And for all these tokens issued, only the team is often subject to the same lockup. Everybody else, whether that's, retail, airdrop farmers, sometimes even market makers, like they're typically not subject to the same restrictions. So I think VCs are pretty aligned with token issuers.
And the terms now for lockups are pretty stringent, right? It's like minimum like 4-year vesting, 1-year cliff type.
Which seems kind of right. You should, if you're a VC, you probably have 6 to 10-year fund. You should probably hold this for some of that. So incentives pretty aligned. What do we look for? I echo Chris, like don't rush into it. If you're leaning on a crunch with no real product to acquire customers, that will come back to bite you. And so kind of like a thoughtful go-to-market, a real value accrual story for the instrument are some of the kind of first things we look for.
Yeah, what I wanted to add was like everyone loves to shit on VCs, and I don't know why, but you're right. Like they are some of the obviously longest aligned stakeholders just because of how their funds are structured. And for our case, and the case of many other protocols, like the VCs are buying back tokens and buying back equity and all these things. So they're redoubling down, tripling down on the bets that they believe in. As was the case for us, our VCs were supportive and we're actually buying secondary from other early guys. So yeah, I think to the point of when should protocol launch or think about a token launch and timing it. I actually have a strong take that it should at the very least be as far away as possible if you could help it. But also think about if you even need one. I actually don't think you really need a token like nowadays too, especially in this environment. It can be an amazing incentive tool. When we launched our token 2 years ago and we used it as a incentive tool to put in our products, and it does work. It actually does help stand up like a net new business, and it can help. But I would say, if you have the cash already and product market fit, it's just an additional burden. So I would say, like, if you're a project, just don't, thinking about it. I would say try not to do it, or at the very least save it for when you think it's absolutely like necessary and you already have like a business behind you. I think it's a core ingredient to making tokens successful is like having a business that actually works and a product that people actually want to use. So if you don't have that, then don't even think about it.
The other thing I was going to say is when you launch a token or when you're thinking about launching a token, a lot of it's managing the expectations of your customer base or the users of your product, in this case, the community holding the token. What we see a lot in our space, like FalconX, is they launch the token at way too high of a TGE, and there's really just no bid up there. It's like a $5 billion FDV with 3% float. Like no one really wants to buy it there, and it just goes down only. And what you end up doing is the chart looks really bad, but like it hurts the community more. So we really think like before launching a token, these teams need to like really manage expectations with the community and understand, like, do we need a token? Everything, like everyone said, do we need a token? What's the purpose? Will people stay? What happens if it goes down? They need to think through this roadmap.
I mean, what's interesting with tokens is in a sense, it's also a way to capitalize on your social capital and the traction you have in the communities around your project. And when done right, it can allow you to actually fund growth opportunities. And it's not too different from what you see these days, even in capital markets with GME, right? When they're like, well, now we're going to buy a $50 billion company with our equity because people are willing to give us a premium on that. So how do you think in terms of like sort of KPIs? What are the right KPIs to think, okay, I might be ready or might be a good time to do a token launch?
I'll go first because we again thought about this, and as a token issuer, and with an operating company, number one is just users, like MAUs, and I think that's your North Star. Because to have a successful token, in my mind, you need 3 things. You need PMF and a product that people like. You need some narrative, and people want, they need to care. And then you also need some economic flow into the token. The latter two don't work if you don't have the first one. So the most important thing out of that entire thing, and it falls apart if you don't have it, is PMF, a product that people want to use. In other words, a cash machine that you could then throw some profits into the token. But the easiest thing to measure that, and the highest level metric, is in MAUs, in my opinion. And of course, downstream to that is revenue. And those two, just keeping it simple, are the main things. At the peak for us, when we launched our token, those two metrics were the highest. When we launched our token, it was our best year in 2024, off the back of the most growth and the millions of users. And I think millions of users is actually like what you should aim for, not hundreds of thousands, 10,000. It's not enough.
Yeah, I kind of love that. Like, I almost ask the opposite question. It's like, it's really easy to answer when it's too early to launch a token. Like, we've seen teams, notably in Deepin, having sold hardware, and then they launched the token when they sold like 600 units to 600 people. And that just seems like you are way off the million MAUs. Yet these teams are adamant about going to market, and they feel they need to do this because it's been the playbook for the space for the past couple of years. But that playbook, I think, is played out. Yeah. And you're really like trying to cement existing something that works in your product rather than spark something from thin air with balance sheet expansion.
Yeah, agreed. I think it's I think those teams are trying to use a playbook of, we launched the token as an incentive tool to get the users. But those are like ghost users that just are incentivized by the token. So they'll leave after, the price goes down, which eventually it will if you don't have a product that already has millions of users. So just focus on getting the users first. That's number one. And then if you have that, then you could actually use it as an incentive tool, especially if you see value accruing back to the token and you see an upward trajectory. You could create a lot of fans with a token. Like, it is an amazing incentive tool. I'm not like bearish on tokens. Obviously, like, we're a crypto operator, and it can be used really well. It's just like timing and at the right stage is sort of very key for us, and I think key for all the operators out there. I think that's from POV of someone that's done it. It's like,
I don't know who in the room played James Bond on N64, but if you remember the golden gun and the golden bullet, like, too many entrepreneurs think they're gonna hit the opponent with the golden bullet. That is your TGE, but when you miss with the golden bullet, you can't play it again. So,
oh damn, yeah. I haven't played, but that sounds like, golden bullet's kind of like a fun way to think about it.
Well, it puts a lot of scrutiny when you have a liquid token on your project, right? And so the other part is, you mentioned having a real project with real cash flow, and those cash flows having a bottom line impact on the token. There have been a lot of recent changes in the regulatory landscape, especially in the US. How is that impacting the ability to do that more effectively? And do you see that actually being done in effect?
I don't think we're there yet fully. But I think what the unlock will be is when the regs pass and they allow you to stake the token and then get flows in the form of like USDC. I think that will be like a watershed moment. I don't think we're close to that yet, but like, I think that will be very important, because then you're not programmatically buying back the token, just buying it with free flow. You're just letting the user decide with its pro rata share of the cash flows what it wants to do. Because right now, if you think about it, like, a lot of these tokens that are like equity-like, so I mean, Pump comes to mind. It hasn't really done that well. The one exception to this is like obviously Hyperliquid, but Hyperliquid is the exception, not the norm. And it's true, like, yeah, I'm a big fan of Syrup and I'm a big fan of Sky, but if you look at them based on like normal cash flows, like, they're still overvalued, and they don't trade that much relative to other tokens. So what I'm trying to say is, I still don't think we're there where these revenue generating protocols have equity like tokens, because the tokens don't act like equity because they generally go down. So once that flip switches with like regulation and you can stake it and get USDC, I think it takes away a lot of pressure off these teams, because it's like, here's your cut of the cash flow, just like a dividend. You can buy the token or you can sell your yield and you can move on and just stay staked.
Yeah, no, I agree. Like, you've seen a lot of teams turn on more buyback programs and sometimes buyback and burn. And those are probably the most direct form of value accrual from cash flows to token that we're seeing. That is not the same as like a direct claim on cash flow, right? The teams have complete discretions as to the size of the buyback, the frequency of the buyback. The communication around them is pretty vague and opaque most of the time. So we are not yet at the network equity. There is no equivalent for earnings per share. Like EBT is not a thing yet, earnings per token. But hopefully we get there. That's certainly the vision. And that's what we underwrite to. Like when we write an exit analysis for a company, we say, hey, in 50 years, if this protocol is producing $50 million or in 5 years, if it's producing $50 million of profits, like on a real world multiple basis, this is sort of like the terminal EV you could look at, right? With a crypto premium, which there still is, I think I agree, despite the fact that it's collapsed, plausibly that could trade higher, but we do look at these fundamentals and we do think that's where, models have to trend to.
Yeah. And I think the other thing is sort of the tokens just lack the same legal and investor protections you get around equity, where even if there's a buyback, it's fairly easy to change and in a pretty opaque manner. So that's that level of uncertainty makes it difficult, I think, to do some of the token investing right now.
I think value accrual is a huge thing it's obvious, it's obvious statement, but like, I think we've seen like maybe 5 examples in this year alone where a project gets taken over that has a token and the token holders get nothing. And it's like, I think Coinbase did one with Tensor. There was another one recently where STSS acquired Locked or something like that. I'm sure we could just go through them. And yeah, there's a lot of these. And it sucks for the token holders, but it reinforces what everyone up here is saying, is that like, it doesn't make you want to bid the tokens if you just get rugged when the company gets acquired. So,
that's super interesting because I remember talking to the corp dev teams at Coinbase, Circle, Binance, and for years and years and years, they told me like, we've already acquired a startup that's issued a token. We're never doing it again. And in the past 12 months, that has changed radically. There is appetite once again. And for companies whose charts look terrible and who have played their golden bullet, the equity exit is perhaps the most appealing option. And, there is certainly consolidation in and outside the sector that's accelerating that. So for a lot of these projects that haven't had a clean value accrual story, you're literally last in line if you're holding the token. Some tokens have done a better job of or some teams have done a better job of saying, no, we're literally prioritizing the token. So you look at projects like Morpho or Sky as examples, there is no equity you can bid, right? All of the value gets driven to the protocol. That is not the norm, to your point earlier.
And Morpho is outperforming based on that. Another thing that's interesting, last point on this, I just do this all day, so it's interesting to me. There's a token called Pumpcade. And Pumpcade is Pump.Fund seeded it. And what they did is they launched a token. And then they said, if you take if you buy the token, you get equity at, I think it was like 2 times, it's a 2x dilution. So in other words, if I buy the token at 40, I'm getting the equity at 80. And the first thing that happened is the token went straight down. And then, but I think it's interesting that teams, the point here was that the teams are thinking about this value accrual issue, and we're still having to jump through hoops as to legal structure with these things. And it's better if it's clean, and it's just not clean right now, but we're getting there.
I mean, and to be fair, there is some blame to be put also on the regulators on this front, because a lot of it, of not being able to put the value accrual in the actual structure of the token, was because otherwise you would be deemed a security.
Yeah.
Right?
100%. I could tell you that from an operator's perspective, if you have a legal team that knows what they're doing, 2 years ago, they would have advised you, as well as external counsel, et cetera, they would have advised you to be careful about how you frame this to the public. Right.
And when they went after the A16Z of the world for just being an investor in some of those protocols, I think that was there was even more pressure on the operators from the investors to be like, hey, I don't want to end up in jail.
Yeah, exactly. And then obviously that colors some of your decision making internally and what you do. Now we're in a different environment, new administration, and a new quote unquote than 2 years, but obviously radically different environment. No one's getting sued by the SEC, and people are more risk on. So this is great. And I think teams are actually could breathe a little bit now and could actually design token value accrual schemes, and put it out there in the market and try stuff out again. But yeah, +1 to, token value accrual being important. Ends up just being a math problem at the end of the day too, because the default with all tokens is people will sell them, right? That's the default. Yeah, like use case number 1 is a thing that you sell. That's what a token is, right? And so when you have that as a default sort of setting, you have to figure out the math to make the token price go up and make this valuable as an economic tool, and as a tool for your community, a tool for growth incentives, a tool for M&A. It is a super valuable tool. We've used it. Like, we've acquired companies with token and cash sort of mix. It's worked out great. And I think again, I'll go back to it just ends up being a math problem. Like, are you buying back more supply than you are emitting? And if you are, then you'll do great. If not, you won't. And empirically, if you look at tokens that have buybacks today, I mean, generally every token is down, like across the board, but those tokens are less down. You guys could probably name more examples than I can, but like, you look at some of these examples already mentioned, just look at the data. It's like, there is some amount of bid, even though it's still a down looking chart, not pretty. It definitely looks better than if like the protocol didn't turn on some sort of revenue buyback. So not
Relative outperformance.
relative outperformance. Yeah. We take the wins where we can.
And so maybe you have a little bit of a spicy take, but I know there's a lot of those conversations these days. So you've tried the golden bullet, didn't work. Can you just scrape the token? How do you like reverse merge the token into equity and try to make the token holders in some fashion kind of like whole or get some piece of the pie?
Yeah, I mean, across protocols doing this now, right? Their proposal was actually quite well received. I think that's because they are not rugging, right? They're deciding to say, hey, token holders, you backed us. We know you have no rights, but we're offering you an opportunity to participate. I think it depends on the company, right? Certain businesses rush to a token because it was the default structure that got you a market premium for years, but those businesses might be regulated entities trying to launch ATSs, broker-dealers, whatever. In such instances, we're telling our companies maybe the equity path makes sense, though a painful transition. And if you're going to do it right. And thank you for coming to solicit us. For a lot of these teams, it's more of suffer through the market. If you launched a token, especially in the last year, like you kind of have to try to see it through, or at least that's our stance. But I expect to see more of these. They won't all be successful, but for a number of cases, it will be interesting. We have a company in the portfolio where they've been approached by investors who have told them, we love the business, but we don't do tokens. And this is a team who only has a token. There is no equity. There's no opco. So, these questions make you think, and you see where the market is, makes you think.
We had a portfolio company where they issued both equity and they had plans to launch a token. The token wasn't live yet, and they decided they didn't need a publicly traded token. They're still using blockchain. They're still using the underlying technology. And I think they did right by their token investors by offering people to convert their tokens, whatever investment amount they put in, into the equity startup instead. So I think that's a potential solution. Like, obviously, like different funds, if you're a token only fund, that presents problems. But I think that's something a lot of companies can look at if the tokens of equity sides are close enough together.
We're almost coming out of time, so if should we do a final round of quick takes on token, no token, when, and what do you see the upcoming year being like in terms of token launches? Who wants to start?
I think you should launch a token. I think the token should launch at a low FTV. I think you should make your community wealthy and give everyone a chance to buy low. And if the protocol can stand on its own 2 feet and generate revenue, I think one thing we've consistently seen is the coins that are the strongest are the coins with the strongest community. And that generally means you made your holders wealthy. There's a reason that everyone loves Hyperliquid, right? There's just a reason. Because it goes up and they got an airdrop and they had a chance to buy it low, and the team doesn't rug, and the team doesn't issue tons of new tokens in the ecosystem to dilute the bid for hype. It should be used as the benchmark. And it's not a secret why it does well, because everyone that bought it and held it got really rich.
Yeah, despite my bearish takes on tokens on this panel, I will say yes, launch a token, but only if you have a cash machine, product that works and millions of users. That's a big but. And stumbling on that cash machine is obviously not very easy. But there's a few proven business models that work in crypto exchanges, crypto casinos. I'll shout out that we're launching one soon in June, and that's the next iteration of what we're doing now. But last little shill there. But look out for it. It's going to be great. It's already doing more volume than all of NFTs combined together in beta, which is insane. So yeah, go find your cash machine if you're an operator, and hold to launch that token until then. And that's really it.
Yeah, I mean, should you launch a token? Maybe. It depends what you're building. Are you building a network? Are you building a company? Are you going to accrue value to the token, or is it just balance sheet expansion? We still like tokens. Anecdotally, our first fund is probably 50-50 in terms of where we think companies will drive value to. I don't expect that changes meaningfully. I do think fewer and fewer tokens will achieve the levels of success that we've historically seen in sub 1 year, sub 2 years, right? A $1 billion protocol that trades $100 million a day when it's been in business for 8 months is not the norm, and was probably like at a phenomenon of a point in time.
Probably similar thoughts. I think about could use a stable coin instead of launching your own token, but there is a place for some tokens. They should probably be launched later in the company life cycle than they have in the past.
Amazing. Well, thank you so much for your insights. Fascinating conversation, and we'll continue with the program. And feel free to come over to us after this.